Hello, everyone, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day, and before we get started, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today I'm very excited to welcome back to the program the host of the Actionable Intelligence Alert, Mr. John Polomny. Welcome back to the show.
Thanks for having me.
It's great to have you here. I really love your weekly reports. So much insight there, especially in the energy sector, which you've been focusing on a lot these days. So I wanted to start there and just get your broad view on the energy space at the moment and the main tailwinds you're seeing for the oil and gas sector that are driving your investment thesis here in 2023.
Well, I think with respect to energy overall, I think you have to talk about it from like short, mid, and long term. I mean, obviously, mid and long term, my view is that the chronic underinvestment that has happened the last 10 years is going to, in new resources. I mean, it's an extractive industry, so you have to constantly reinvest. That didn't happen. Everybody kind of knows that. But in the short term, I think it's pretty exciting what's happening. I think in 2023, at least with respect to oil, I mean, the reopening of China, I think no one really expected the CCP, to just rip the Band-Aid off and say, go from like welded doors to we're full open. And I suspect that the Chinese people are probably going to be like most people. They've been locked up for 3 years, and they're probably going to go out and spend a bunch of money. There's probably about, I think I've seen a couple $1 trillion in pent-up demand, just like in every other country. I would also add that the CCP, or the People's Bank of China, this was all planned. It wasn't like the riots or everything. They kind of just decided to, flip the switch. I think they accelerated it a bit because of some of these things, but they were already adding liquidity to their all of December, and they've pumped about $250 billion into liquidity. So this is one of my themes about, as Druckenmiller says, in the short-term sentiment and liquidity drive markets. So we're already seeing the things that I'm tracking numbers, traffic congestion in several of the big cities there, airline traffic, inquiries into travel are up hundreds of percent. They just opened some of the airports for international travel on the 8th. You have the Chinese New Year coming. So I suspect that, when that 2 to 3 million barrels of demand that wasn't in the market last year because of the lockdowns in China, I suspect when that fully comes back, probably sometime by the end of the second quarter of this year, it's obviously not going to, it's going to be a ramp up, but I don't think the market was anticipating that kind of response. And if you add into that the ending of the SPR releases by not just the United States but several other countries, which is about 1 million barrels a day, and then if you, depending on what you want to assume vis-a-vis Russian production possibly being curtailed, you could be in a situation where the market has a call on OPEC and shale of 4 million barrels this year. And in a 100 million barrel a day demand market, a 4 million barrel call of supply, I don't know where that oil comes from. So I think that you could definitely see oil surprise to the upside in price this year. But I think that would build over as the Chinese economy comes back online. I mean, the Chinese are going to force feed this to get it going again. And like I said, with it was 3 years of lockdowns there, severe lockdowns, not like in the U.S. It wasn't as bad, or in Europe. I mean, they were locking people down and welding doors shut. So I think we'll see how that goes as 6 to 8 weeks to get this virus to rip through everybody, if you look through the some of the data from other countries. And I think that's going to be the big driver for oil. Gas, I really don't have an opinion on. I mean, I think Europe got extremely lucky this year because of the weather has not been cold. But I would caution people, this problem is not solved there longer term. The combination of the weather and the fact that the Europeans basically went around the world and outbid every other country for LNG cargoes to the tune of having to spend €500 billion, that's not repeatable, and they didn't solve their long-term problem. So I think that bears watching. I think a lot of people now are going to become placement. I've seen people on FinTwit, see, I told you it's not a big deal. Well, it is a big deal. You shut down a lot of your major industries, glass making, steel, fertilizer production in Europe, and then you had the so far warm winter. It kind of got lucky. I wouldn't base my energy policy on luck, but so I think 2023 gas will be pretty volatile, but I think longer term there's still that has to get solved one way or another.
Well, you touched on Russia there. You really summed up the Chinese situation very well also. But I wanted to touch on the embargoes going on, the sanctions, the price caps, which all seem to be backfiring. And then you have nations like India who are going ahead and buying that oil, sometimes at a discount. Could you maybe unwind for us how you see that whole situation playing out with the sanctions against Russia and how that might impact the price of oil?
Yeah, price caps don't work. We know that from our first, economics class we take in 101. We used to look at the supply demand curves and talk about price caps there. Ultimately, they don't work. So what you have basically, oil is pretty much fungible. So you just mentioned it. You have a country like India, for example, that's really taken advantage of this situation. They're able to buy crude from Russia at a pretty big discount, bring it to India, refine it, and then export those refined products like diesel at an equivalent of $150 a barrel to Europe and other places that are short. So they're playing this arbitrage. And so I think what I said in a video about this is I don't know exactly how it will play out because I mean it's to the advantage of the consuming nations to buy this crude at a cheap price. But and the Russians need to sell as much crude as they can to fund their budget for their adventure in Ukraine. But in the end, these don't work. And so this is a speculator's dream, right? For example, you have what benefits from this? Well, I mean, you've completely discombobulated this efficient transportation system for oil and refined products around the world that was working very well. You remove all these pipelines or these short trips from the Baltic ports to Europe, and now you have these long journeys. So you've increased tanker ton miles, you've done things there. So you have these opportunities. This is what speculation, in my mind, is about. I'm an investor and a speculator, and speculation is looking to take advantage of where you have these. I want to use the right term here. Interventions into a market that cause distortions, and then those are investable or tradable. So that's what you've seen here. So, I mean, we have to wait to see how it plays out. But I'm, again, again, trying to legislate or command the market to do what you want it to do is kind of, well, there's a fable about this. King Canute telling the ocean tide not to come in. It doesn't work. So we'll see what the repercussions are. But that was just, I mean, if you look at just product tankers, for example, just as a way to play how I was able to take advantage of this, and I got lucky on this. I wasn't anticipating this, but if you look at how tankers have taken off, product tankers, it coincides exactly with the invasion. Because it's totally when the sanctions went on, just you screwed up this efficient. The capitalism really works pretty good. The free hand of the market. It's going to find the cheapest, easiest, best way to transport goods, manufacture. And if you go in there with government fiat and start, whether it's morally correct or not is another question. But Europe chose to do these things, so it causes distortions in the market. So it creates opportunities. So anyway, to the point where India actually had to legislate to stop exporting refined products because refined products were going up in price in India because there was so much exporting to take advantage of this huge arbitrage. So that's about the last thing I'll say about that.
Well, let's pivot to uranium for a moment now, because you recently mentioned that it's still your highest conviction thesis. And as you always say, nothing's changed. We see, you were talking about FinTwit, we see people get emotional, we see all the memes, we see people following the day-to-day price action and complaining that nothing's happening. And when it comes to the fundamentals of the uranium space, they're rock solid. I've discussed them ad nauseum on this show. You have on your show as well. But I wondered, in your opinion, do you think we're still in the early stages of a uranium bull cycle? There's people like yourself and some others I know who bought in earlier. Some people in 2014, 15, maybe even before that, who've already made quite a bit of money in the space. So do you think we're still in the early stages? And also, do you think this bull cycle could be maybe longer and more protracted than the parabolic spike pre-Fukushima?
So I'll take the last question first. Yes, I think that I've talked to some other folks about this too. And I'm a generalist investor. There's people that devote their whole life to talking about uranium, like Justin Hune, people like this. But my view is that you're seeing you're seeing a realization start to come about, at least with the emerging economies in the world, a global South and global East, where energy security and the need to, have a diverse, and so that when this growing demand that they have and electrification that's going on as they enter these S curves of middle class, so that when people go flip a light switch, it comes on, and they're not their priority is that, as the Indian energy minister says, I have 1.4 billion consumers that I have to supply energy to, so I'm going to do what I need to do that. And so that's the priority for the places that really matter. Look, the US and Europe, in the big scheme of things of the whole world, that's not where the growth is. That's not what's going to happen. Focusing on Asia, focusing on the global South. I mean, the fourth reactor in the UAE is going to come online this year out of the original six. I mean, does anybody know Egypt's going to now have a reactor? Turkey. So people are not really. Bangladesh has a reactor coming out, their first reactor. So this is where the impetus is. This is where the growth is. If you look, the dip from Fukushima, we finally have exceeded the total terawatts generated worldwide since Fukushima last year. And that's just going to continue. So the demand, the supply, fundamentals, nothing has changed, as you said. So yes, I think that, and with the zeitgeist in the West being on carbon emissions being seen to be the priority of the West, you do not fix that problem. I build power and operate power plants. You will not fix that with intermittent power sources. You must have base load. And you're seeing the disaster that the Energiewende in Germany is now. €500 billion spent on solar and wind, shutting down the nuclear base load. And you have militia now with weapons and riot gear standing at a lignite mine. I saw the picture as they're mining the lignite, keeping the protesters away. I mean, it's a total disaster. So people that are watching this from the outside that are managing their economies, India, China, all these places, global South and East, they're looking at it and say, look, we have to have a diverse mix. That's why you're seeing, China and India both accelerating their nuclear programs over the last year, making announcements. And if this doesn't tell you where this is going or why it's going to be longer and more sustained, Japan, where they had the Fukushima accident, has now, it's 180 degrees. They're bringing everything back online by the end of this summer, virtually everything, not every reactor, but pretty close. If that doesn't tell you where we're going with this. And so the big funding, tens of billions of dollars of funding for SMR technology, this is where the real action is going to be. So I think, yes, you could always have a situation, for example, like, I guess if the West really wants to sanction Russia's enrichment capabilities, because they have 46% of the world's enrichment, they could do that, and that would cause some price spikes and things. You could make the case, but I think your question kind of answered itself at the start. It's going to be longer and more sustained because it's going to come into the real. You're seeing more and more now thought leaders getting behind this, TED Talks, and people, the canards about waste and some of these other things, they're easily dealt with. So if you have an understanding, and basically, there was a concerted effort to demonize. I mean, you look at the comic books from the 50s and 60s when they had these atom bombs and people were hiding under the desks and drills. That kind of manifested and created this certain thought process or zeitgeist that carried over. But if your goal in the West is to reduce carbon emissions, and if you're in the global East and South or emerging markets and you want to have a sustainable economy with energy security, nuclear, I think, is going to has to be in the mix. It will be in the mix.
You mentioned Germany there, and they seem to be the poster child for what not to do with all of these insane ESG policies, and this agenda is starting to look more and more ridiculous as time goes on. Of course, if you ask anybody, they want a cleaner planet, but the way these politicians are going about it is literally completely insane. So you mentioned Germany. Could you point out some of the other hypocrisies and blunders these politicians are currently making and what you think it would take to turn it around? But also, there's a deeper question here. Are these people incompetent or are they nefarious? What's your thought there?
So you have to understand. I mean, look. people of wealth and power conspire. So, I mean, let's be honest, okay? But I don't believe in conspiracy theories. We don't have this small group of people sitting in a star chamber with a 40 watt light bulb making all these decisions. You have different interest groups. You have people in the environmental movement that this is what they care about. So that's a group of constituents. There's a group of constituents now that this renewable business has grown. I've seen it grow. I mean, I was originally working in nuclear power plants, coal plants, natural gas plants, and I got into renewables. I've seen the industry grow. So it's 200,000 people working in it, lawyers, lobbyists. I went to the solar conference in LA in September. It was 50,000 people in Anaheim. It was, we're back, all this stuff. Money was flowing. If you wanted to get, people were going to Morton's and spending $1,000 dinners. I get it. So you have that constituency. Then you just have, you get a certain zeitgeist, the media, the apparatchiks in universities. It's kind of the thing, right? And so you have that going. It's not like a conspiracy or anything like that. Then you have situations like in Germany. The Green Party leads the coalition. Their whole dynamic of the Green Party is Atomkraft, nein danke. Nuclear power, no thank you. The little atom with the red face, and that was their thing. I have a t-shirt I made, nuclear power, yes please. And what are they going to do now? For 40 years, the party was against. That was the thing that they were against the Greens there. So that would be like telling a Baptist to convert to Catholicism. It doesn't happen like that. So they would have to basically throw away the whole being of the party and the politicians. Just wouldn't work. And so they continue down. It has a certain amount of inertia. And so you ask, what will it take? It will take people's standard of living going down, where they will actually get up off the couch and, and vote these people out. And that takes longer. You got to get hit upside the head when you start seeing your standard of living going down or the lights going out in a first world country. You have an expectation, if you live in Europe or the United States or Japan, that you go to the light switch, you give it no thought. You turn it on, the lights should come on. I mean, people don't even want to wait in line at Chick-fil-A for 5 minutes. They start getting antsy. So people have a certain expectation, and I think once those expectations don't get met consistently and cause grief, the power goes out for 4 hours and all this meat in your freezer starts going bad. This starts building. You're like, wait a minute, what are we doing here? So I think Malcolm Rawlinson and I talked about this 3 years ago, and he said that, that was like the first interview I ever did. We said the same thing. People have to feel sufficient pain to motivate them to change their view. You got to get hit upside the head. In the, as Doomberg says, when physics meets politics, physics wins every time. And so I think it's just part of a learning by experience situation. Most people don't care. They don't have a view on it, but when it starts affecting them and being detrimental to them, then they will start, focusing on it. And I think that's when you get the change.
So you've mentioned that you think 2023 is going to be a very volatile year, and I'm wondering if you see volatility across all sectors of the market, including the broader market, or more specifically in commodities. And do you see drawdowns in this environment as an opportunity to quote unquote buy the dip, or do you think people should be more cautious at this point in time, given that some sectors may have a lot further to fall?
So I've given this a lot of thought. I think the general market, if you go back to like the tech wreck in 1998, 99, 2000, subsequent to that, we had the stock market, and the NASDAQ was down like 80% or something. But what did well during that time? Value and resource stocks and things like that. So these things are kind of counter-cyclical, even though it's intuitive. It seems intuitive not to be. This is what people will think. They'll think, well, the economy is going to go into a recession, may already be in a recession, therefore commodities must go down because the demand for, but it's Jim Rogers said in his book about commodities that I read 20 years ago, if supply falls faster than demand, the price will still go up. I mean, copper just cracked $4 a pound again today because China's opening it up, and it's the consumer of 50% of copper. People will say, well, China's over, you've got people like Kyle Bass, who I respect. He's a top investor, but he's been saying that China's going to collapse for the last 10 years. It probably will eventually. They probably are overbuilding things, but in the short term, sentiment and liquidity is what drives the market. So if sentiment starts to turn positive, people are going to jump on these things. But I do think that, I think as an investor, you have to approach these things from a medium and longer term mentality, and medium term I'm thinking like 18 months to 2 years. You have to give time for these cycles to play out. You have to understand, especially in resources, and I've mentioned this so many times, but few people grasp it. If you're going to look at oil or copper or some of these things, okay, so oil went to $130 in June after the invasion. It peaked, and that's probably it's given back about 40% of that. Has anything fundamentally been fixed? The world stocks are still drawing down. All these things are, these lockdowns. So you have to incorporate this in your thinking. Did the underinvestment get fixed in the last 6 months because oil went from 130 to 80 on Brent, whatever it is today, 79, 80 bucks? It didn't get fixed. And now, I think that's where you're going to see the volatility. Okay, you're going to see, I think, a lot of these things move higher, and then you're going to start seeing, you can't overthink these things. You just got to look at each individual, because each individual resource market has its own dynamic and its own drivers. I don't necessarily think you can just say super cycle like when China was first building out things in the early 2000s. It's not the same, but you just look at um, copper or any of these things. In the short term, anything can happen with the price. It's like I said in this video last week I made. Look at the 52-week high and low of some of the stocks that you hold in your portfolio, and look at the range between the high and the low just for the year. It can be 40 or 50%. Did the actual value, intrinsic value of the company vary 50% in 1 year? Probably not. So you have a lot of volatility that's being caused because of, you have to remember we're in a tightening worldwide, we're in a tightening liquidity cycle. So it's hard for things risk assets to move higher. So if China's number one consumer of commodities, and they're opening up after being shut for 3 years, and they slammed a 250 billion in last month into their economy, with more probably coming to ensure that this thing gets going, then you have an opportunity there. So that's how I kind of look at it in the short term. In the long term, I mean, copper's going probably to 10 bucks. All these things are going to make all-time inflation adjusted highs. It's not going to happen this year, but eventually will happen because the underinvestment is not being dealt with. And a lot of it's being driven by government policy and the reluctance of executives in the energy industry and in the mining industry. They don't want to have to sit in front of Congress and be called names. So the safe thing to do, look at some of the big miners, BHP, Glencore, Rio Tinto. They're all near 52-week highs. Why is that if we're going into a recession? Because of the underlying fundamentals of the commodities that they produce. Iron ore has bottomed, is starting to run now. Why? Because China's opening up. So we'll see if that continues. Obviously, as you well know, you can't just buy and hold these things. You have to have a view. But something like uranium, it's set and forget because the cycle is so long, and there simply is none of these things are like shortages where we're going to run out of uranium or copper. There just hasn't been any investment to extract them from the earth, and that takes years, and that's where your opportunity is, in that span where that investment catches up. And that's going to require a mindset change, because if you're an executive at an energy company, and many of them have already said this, the CEO of Pioneer said this, for example, what's he have to do to collect his $1.5 million a year plus his stock options? All he has to do is do maintenance capital, grow 2 or 3%. He's got a 10-year, 15-year runway of tier one, and the board's happy. He's returning money to the shareholders. The shareholders are happy. He collects his money. If he walks into his board and says, you know what, I think that oil's going to go to $200 a barrel, and we need to borrow $6 billion, and we need to drill, baby, drill, and lock up all the drilling rigs and pipe, they'll fire him. So we've done that with this new thinking that we have around calling these things, evil or unnecessary. We really financialized our economy and really turned it into this technology society, where we forgot that if you don't grow it or mine it, you don't have it. So anyway, that was kind of a long answer, but that's where I'm thinking at. You got to be flexible on this, and I think just understand what you own, and if you have reasonable expectations. I mean, a lot of people were up hundreds of percent on some of these things, and they have a tendency to give it all back. The best investors in the world, 15 to 20% a year consistent over 20 or 30 years, and you got to 300% gain on a stock. I mean, come on, take some of it down.
Right. Yeah. And then what you mentioned about share buybacks and dividends is what I think one of the things that makes oil so attractive at the moment is you're kind of getting paid to wait. There's so many of these companies that they don't even need to pay dividends. The valuations are so great and the assets are so great, and yet they're still paying dividends with plans to increase dividends, with plans to do more share buybacks. And it's just a really great place to invest if you have a proper time horizon, as you mentioned. So I want to stick with oil here again, and we talked about India earlier and how they're buying cheap Russian oil, refining it, reselling it to the West. But inside India itself, oil demand was up 3.1% year over year, and actually up 3.4% from 2019 before the pandemic. So do you think this trend will continue in India and other places? Will we see increased demand in emerging economies as a new middle class starts to establish themselves?
Yeah, this is exactly why we're going to make all-time highs in oil. There's a website that people can go to. It's called Our World, and it has all these data sets. And what you can do is go there, and it's fascinating. I'm probably going to do this exercise. I did it like 10 years ago. I'll probably do it again. But you can go there and put like Our World uh, oil demand by country or something, and it'll give you a graph, and then you can just choose you can get rid of all the Western countries. You can put like the U.S. in there, and then China and India, and even if we have this certain thought process going around that by people that should know better. Well, oil demand's going to plateau over the next 3 to 5 years. I mean, they must be out of their mind. They must never have been to these places. I mean, I've traveled pretty extensively around the world, talked to people, been to these places. They have the same desires and same wants that we want. Okay. And so if you go and look at these charts and do a per capita analysis, I mean, come on. I mean, if you want to take the numbers of just China, is not even, and don't even use the United States. We have a car culture here, so don't even use the United States as an example. Use South Korea and Japan. Okay, they have extensive uh, mass transit, but oil doesn't just go into transportation. And just to get to those levels of consumption, you have to get to 120, 125 million barrels a day of production. How do you get there from here? Where are the new fields being found? The biggest find in the last couple of years is offshore Guyana, and Exxon's got it up to 360,000 barrels a day, and they might get it to 1 million barrels a day by the end of this decade. Where else is the demand? Don't forget the demand growth of 1 to 2% a year worldwide, but don't forget Exxon's slide from 3 years ago, 6% depletion worldwide. So you have to find and bring online 7 to 8 million barrels of new production every year. Where is it coming from? It's not. And so I'm open to hear where this is coming from, and you're not, people in India are not buying Teslas. They buy a motorbike or a moped, then they graduate to a smaller car. Air travel's increasing. It's not just India, Bangladesh, Indonesia, Pakistan, Egypt has 100 million people. I mean, by 2050, there's going to be forecasted 750 million Nigerians. I don't believe that, that's linear, but Africa, I mean, isn't even hardly even developed yet. And if you go and actually look at these things visually, then you start realizing what's going to happen. You realize that people in India, it's freaking hot there and they want an air conditioner. Well, how much copper is in one of those units? You can start doing these spreadsheet exercises, which I have done, and then you start coming to the realization, yes, there'll be ups and downs and there'll be recessions because all these markets trade at the margin, but the long-term trend is obvious. And the main thing that I keep harping on is there simply has not been enough investment to meet these increased demand. It will come eventually, but that time frame between when that happens is what I think is going to. People are going to be shocked. I mean, even Gordon and Rosenzweig, read their report from last year. They don't have any $10 on copper a pound. I've seen people 15, $20 down the line. So this is going to have a lot of effect on ESG and what's really reasonable. What can we do if we're going to electrify the whole world? Well, how are you going to do it if you don't have enough copper to do that? So I think this is people just say they don't really know the numbers. The sheer 1.4 billion people. And I mean, just look at the total populations, list all these emerging markets, their populations, and start doing per capita analysis. You can't come to any other conclusion.
Right. And this is also part of the hypocrisy of the ESG movement is you have all of these people who've grown up in an environment which we've had in the West that's so convenient, whatever we want at our fingertips. And then we want to deny other people that, these ESG fanatics. And it's so insane to me. I do want to get your thoughts on the bear case for commodities because the counterpoint you always see come up again and again is, oh, well, we're going to enter a massive global recession that's going to totally crush demand and there will be no commodity super cycle because of this. What's your thoughts on that?
You will have a secular, when I mean secular, decade long, in my view, where you have higher prices at the end of that cycle from the lower point. So you will move from the lower left on the chart to the upper right over the next 10 or 12 years. Okay. You will have inside of that 10 or 12-year period two, maybe three cyclical turns because you're right. You do have, remember, commodities are priced at the margin. So if world demand is 100 million barrels a day of oil and the world's producing 101, that 1 millionth one barrel is what prices the other 100 million barrels. So if you're oversupplied, it doesn't take much in any commodity, undersupply or oversupply, to cause these big price swings. Okay. So I have no doubt, I'm not an economist. And so I would suggest, though, that markets are forward looking. And when I see Glencore, BHP, and Rio Tinto at near 52-week highs, that's telling me they're not seeing a global recession. What they're seeing, I think, is, and what do central banks that are now about almost 100% tightening, what do they do during recessions? They reliquefy. And so are you closer to the beginning of a tightening cycle or near the end of the tightening cycle? We're already near the end because remember, the last Federal Reserve meeting, they only had a 50 basis point increase. It used to be, it was 75 basis points the last 3 or 4. Now it's 50. So they're already setting up. What's gold telling you at 1865 right now? It's looking out ahead. It's sniffing out the next liquidity cycle. So yes, you can have a downturn. I mean, that's why I've held all my oil stocks through. I mean, I bought them so cheap. I didn't sell anything because I had this narrative. Is it possible? Look at a chart of oil during the 2008 financial crisis. Look at it even during the pandemic. You get these spikes down because you get this oversupply, but then the liquidity cycle starts again. It's a V shape. So some people can attempt to trade this. I'm not a trader, and people say, "Well, I'm a trader." There's all these traders on Twitter, but I don't see any of them on the Forbes 400. What I see is people that have built businesses or invested in businesses with a longer term mindset. And so people can trade this stuff if they like. I'm not a trader. It doesn't really work. I just buy into these trends early, and that gives me my ability to ride through. But I do think that over this decade and probably into the next decade, you're going to be shocked at some of the prices you see. But yes, it's quite possible you'll have 2 or 3 downturns, cyclical downturns within that secular, uh, and so people should try to trade those things or understand. If you just see all these major mining companies announcing, I'm investing billions of dollars in exploration and development, I'm not seeing this. I listened to all the conference calls. No one's saying this. And it's like Robert Friedland said, who discovered the, Oyu Tolgoi mine and then the big mine in Zambia. The amount of copper that you have to mine in the next 10 to 15 years to do the energy transition is equivalent to all the copper that's been mined up to this point. It's not going to happen. There's, there simply has not, nobody's invested to do this. So you're getting ready to run into a wall in reality. And I think that's your opportunity because they're going to push on with this stuff until they can't. So that's why I have this thing that I say on my thing: heads we win, tails we win more. It doesn't matter what happens; we're going to win either way.
Right. Now, we've talked about uranium, oil and gas, copper. Are there any other commodities you're seeing at the moment that present a potential opportunity? Maybe other base metals, precious metals, agriculture. Where are you looking outside of the energy space in commodities at the moment?
Well, I always keep a position in precious metals as an insurance against central bank and government malfeasance. I remember a speech that Ray Dalio gave. I think people would think that he's a pretty good investor. And I thought this was fascinating. He was talking to some other money managers, and somebody asked him about gold, and he was like, "Well, yes, I think that I keep 5 to 10% of my assets in gold." And he said exactly the same reason. And they said, well, everybody started like kind of chuckling. What was so funny about that? This is one of the best money managers in the history of hedge funds, and they're laughing because we have recency bias, right? So we think to ourselves, well, yes, today's like yesterday, so tomorrow will be like today. And, anything can happen. I don't think anybody last year thought there was going to be an invasion of Ukraine and all these other things. I mean, you never know what's going to happen. So I'm partial to holding gold and silver bullion. I did take a position recently in some smaller uraniums or gold stocks, junior explorers, but I'm hesitant to recommend them because they're just such trading sardines and they're so volatile. I mean, some of them are up. I've had them like 2 months. Some of them are up like 80 or 100%. So there's tremendous opportunity there to speculate. But what happens is people buy them because they hear something on YouTube and then they don't really know what they're doing. And then the thing drops 50%. Then the thing fossilizes in their account. They say, that guy on the internet doesn't know what he's talking about. So I'm partial to gold and silver bullion, speculating a little bit around the edges. I'll tell you, I always try to look for markets that are down 90 or 95% and then see if there's a catalyst. One thing I'm watching, and this might sound weird, I have a whole list of just about every publicly traded crypto or Bitcoin miner. Most of them got killed recently. They're down 90 or 95%. It's not time to buy them, but I don't think that that's going away. Most of them are profitable on an operating basis. They just have so much debt that's forcing a lot of them into bankruptcy. So eventually, I think, that's the kind of things that I'm attracted to. That doesn't mean I'm buying them or recommending them, but I'm attracted to things that are down massively and see if there's a catalyst. Usually it takes time to get through these situations. And then once they bottom, you can, look for do like Paul Tudor Jones says, wait for the bottom and then wait for a breakout. And then you'll know, if it's time to buy these things. But that's like some of the things I'm looking at. Agriculture, I mean, I don't know, it's up and down. I'm not necessarily doing anything there, but I think I'm mostly sticking with energy. I think is because energy is so important to everything that we do. I think if you're bullish on agriculture, well, then just buy energy. If you're bullish on just buy copper mine, just buy energy because energy is such an input into everything, and it's been so underinvested. I think it's a tremendous opportunity.
Well said, and thank you so much for joining us today. Your weekly show on YouTube, Actionable Intelligence Alert, is great for those with an interest in the energy space. I think it's the best show on the energy space available on YouTube. It's each and every week, so you guys should definitely tune into that. I will leave a link below. For those who are interested in hearing more from you, maybe you could tell us about the Actionable Intelligence Alert newsletter.
So I created a newsletter to show or to give ideas to people that people might think, well, yeah, I agree with these. I have the same view on energy, but how do I take advantage of that? How is that actionable? And so I provide ideas in there. I don't give financial advice. I'm not a financial advisor, but I do give ideas, what I'm doing, companies that I'm invested in. I give updates. Comes out once a month, so that's available to people if they're interested.
Great. I'll put a link in the description below.
And then you mentioned the video, and then also Twitter. I think people really need to be on Twitter. I mean, just put my name into Twitter. I follow a lot of great accounts. I think this new thing on there that they've had over the last year or so, these Twitter Spaces. I mean, if you were at all involved or knew the Canadian oil mafia guys, I mean, they would go on for hours and hours analyzing these companies. And these are guys that actually know what they're talking about. And it's just a wealth of opportunity and access to people that you would normally never be able to talk to or anything. Yeah, so I think that Twitter, I say that on every interview, people really need to be on Twitter, not for political crap and cat videos, but there's a lot of good stuff happening on there that can help people that are investing and speculating.
Awesome. Well, I'll put a link to your Twitter, Actionable Intelligence Alert newsletter, and your YouTube channel in the description below, so you can check that out. And thank you so much for coming on, and hope to have you on again before the end of the year to catch up and get your thoughts.
Great. Appreciate it.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.